Today's episode of Market Talk is brought to you in part by Growmark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk here on this Tuesday, June 14th. Great to have you with us once again. I am your host, Jesse Allen. Find us online, markettalkag.com. That is our home on the web, all of our radio affiliates, streaming sources, latest news of agriculture, much more online at markettalkag.com. Well, overall, the market trade today felt fairly quiet, some pressure to the downside, not a whole lot of news to discuss, but there is plenty coming up with the Federal Reserve announcement tomorrow, and we have weather worries in the market with all the heat here this week, and of course, the end of the month, the June 30th acreage report, all kind of standing in front of our market trade right now. Joining us here on this Tuesday to discuss the market trade, let's say good afternoon to Jim McCormick with agmarket.net. Jim, great to catch up with you again, sir. Hope you had a good weekend. How are you today?
I'm doing quite well. Thanks for having me on, Jesse. And it is like, I'm sure down where you're at, it is sweltering heat here in northern Illinois and a lot more on the way. So markets are a little bit concerned about it right now. I think the first week and a half of heat's not going to be a problem. This extends a little bit in the latter part of June. It could get really interesting for the crops.
Very, very true. Well, and we see all this heat this week. We have a little bit of moderation, it sounds like, heading into the weekend, but then we're going to heat right back up next week. And a lot of areas there is some decent soil moisture, but once that starts to dry up, if we stay hot and dry, that's going to be a concern. And I know that overall, it really feels like we've kind of thrown ourselves into a weather market. If you take out the inflation worries and you take out the June 30th report coming up, it really feels like weather is about the only driver in our markets right now, Jim.
I think it is. I mean, and normally we do get into weather market as we go into the middle part of summer. Maybe it's a little bit earlier than normal, simply because of how tight the world situation is with the Ukraine. But yeah, I mean, if you look at what happened Sunday night, the market was open higher. But when the stock market really kind of came under pressure, I think that definitely spilled into our markets. And so we're kind of having a little bit of a battle. But yeah, the weather situation that we're seeing right now is becoming a little bit critical for parts of the Midwest. Central Southern Illinois, some of our producers down there just are kind of missing out on the rain right now. They're definitely not panicking at this point, Jesse, but they are noting that the corn is rolling, and you usually don't see it in mid-June. And we're talking temperatures right now in the mid to upper 90s. Heat indexes over 100. It backs off a little bit for this weekend, and then it comes back in. And just, one note I want to make that a lot of producers out there, a lot of people do not realize is we do now have a new national federal holiday, Juneteenth, which means that what it means for you as a producer at this point, market-wise, is the markets are now going to be closed Sunday night and Monday and open back up Monday at the traditional 7 o'clock time period. So essentially, we are going to have our first 3-day weekend in the month of June. Weather, and then when you look at the weather we've got, Jesse, right now, it almost feels like kind of a July 4th type of situation with the extreme heat we're talking about. So I do think it's going to set us up for some pretty volatile trade potentially coming out of this 3-day weekend.
I couldn't agree more, and it's something you reminded me of as well before we went on the air, that Juneteenth is a holiday and going to be celebrated Monday with that 3-day weekend. And so we think about the weather fundamentals and the ever-changing forecast, and I know right now there's a lot of differing opinion as far as the forecast models heading into the month of July, whether this hot and dry pattern is going to stay here. Now, Jim, if it does stay here, it feels like to me that really gives us the opportunity to have some fireworks here in the grains once again if we remain hot and dry.
I think no doubt about it, Jesse. And I think if you look at where it's at, I'm not a weather forecaster. There's no doubt about it. But, if you look at the trend that we've been in pretty much all spring long, the weather forecasters out there that do this for a living have been arguing, the models have been arguing, it is going to be a warmer and drier bias in the latter part of June into July. That has been the trend. That was the European model that was updated this morning for the next 30 days. It's sticking with that trend. So I think the market's got to be prepared for it. And yeah, I mean, the reality is if we start having a legit weather problem in July, when this corn is pollinating, it is probably going to take the top end of the market, the top end of the crop off. And you got to remember, Jesse, we need all 89.5 million acres of corn planted. Now, I don't believe we got all 89.5 million acres planted, but let's work with that number. You need 89.5 million acres times the national yield of 177. That's the working yield. That matches last year's best crop ever. And that'll keep the supply stagnant with anticipated demand. So if you start taking acres off due to the wet spring in North Dakota, in South Dakota, and parts of Minnesota, then all of a sudden you start taking yield off because of pollination issues. We believe this market has a real problem on its hand, and it has to go into a rationing mode. And what we've seen right now is it is very hard to ration food demand. You may not need to buy that new TV when it gets expensive, but you need food and you need energy. You need energy to get to work. You need food to survive. And the goal of the market will be to ration out that demand or essentially stimulate maybe some more demand or more supply out of South America down the line. And then on top of it, what we need to keep an eye on, Jesse, is what's going on in the Ukraine. We've seen a lot of talk recently about the world, especially European traders, of trying to get these food corridors out of the Ukraine that's going to allow this grain to move out. I personally do not think that's going to happen. With Putin at war and still at war, remember, he told people, just a few days before he invaded Ukraine, he told the chancellor of Germany, he told the president of France, no, he was not going to invade that country. And he turned around and did it. So if I think the Ukrainians are not going to believe him when he says, hey, go ahead and demine the port, I'm not going to invade you. So my guess is those ports are going to stay closed. And if those ports stay closed, it is going to force the world to buy food from somebody else. And that puts the U.S. in a very positive position to supply that demand. But then if we end up having a shorter supply due to weather issues, then the world becomes a real problem for the world. But more than likely, it's going to drive the prices higher, at least temporarily.
I think overall as well today, Jim, the market's maybe pricing a little bit more of a hawkish rhetoric from the Federal Reserve. I know there's a lot of talk about a 75 basis point increase tomorrow once the Fed wraps up their meeting. We look at all the inflation data we saw on Friday. We got the PPI, the producer price index today, more inflation numbers there. It felt like that maybe the trade was pricing some of that in, although a quart of beans held up relatively well despite us maybe pricing in some of that worry on Wall Street here today.
Well, in general, the market got hammered yesterday. There's no doubt about it. You saw a general risk off in everything. And that definitely spilled into our markets, the grain markets yesterday. Today, the stock market's been under a little bit of pressure today, but not near the intense selling we saw yesterday. But that is going to have an impact, and that's something that producers need to keep an eye on. I mean, in general, we just talked about the weather situation definitely seems like it could be a very bullish scenario going into this year, potentially. But the reality is, if we really went into a tough economic spiral and you really got the funds needing to wash out of their positions, kind of like we did in 08. Remember when everything broke in 08, it pulled everything down, and it pulled grains probably cheaper than they should have because everyone went to cash not knowing what's going to happen. And that could happen this year. We just don't know. Our group right now is actually encouraging producers to not, when you're marketing grain this year, Jesse, we're telling producers, you don't just have one crop to sell or potentially two. I mean, you still got producers selling what's left of last year's crop. We have producers that are looking to sell this year's crop. We're actually encouraging producers to actually take a look into the 2023 corn crop as well, because we think wherever this market tops this summer, it's probably going to be, odds are, it's going to be a multiple year high. That's usually what happens. And if the economy really would roll over hard for some reason, it could happen quicker than we think. So we think, a pragmatic way to do it is, start to, develop risk management plans. Like I said, not for just the crop in the bin, the crop in the field, but also the crop a year out. So it's going to be a challenging summer, but it's going to give you some great opportunities, we believe, to lock in those profits.
Well, Jim, talking as well about some of those profits locking in, not just for this upcoming crop, but 23 as well. I think about just how cash basis is for some of that old crop that's maybe still lingering around in the bins as well. You look across the countryside, very strong basis, whether we're talking corn or soybeans. And, for some of those guys who are maybe sitting on some old crops still in the bin, those gambling bushels, one has to wonder when the time is to pull the trigger on some of those.
Well, I think right now, like you said, it's your gambling stocks for most people right now. So they're going to let it. I think a lot of guys are going to probably let it ride till they get a better peek of what this summer pollination looks like. But in general, I'm just going to caution producers. I mean, especially producers who are selling to ethanol plants. You're going to get to a situation where eventually they get their needs covered. They're not going to tell you when the needs are covered. It's just at one point, one day they're going to be in the market. The next day they're going to be out of the market. So we're encouraging producers, don't get too, bulled up on it. Encourage yourself to lay off the risk. And then what a lot of our producers are doing, they're going out and maybe buying some shorter dated options, August, September kind of timeframe calls, just to kind of keep some ownership in play in case this summer dryness fear really does come to fruition, but take advantage of the stronger basis. Because like I said, usually these end users, they're in the market till all of a sudden they're out of the market. And like I said, if you're an ethanol plant, the margins start to break. They may walk away and say enough's enough if they can't get their hands on enough grain.
Jim, corn and beans held up fairly well today, as I mentioned. Wheat market, though, some double-digit pressure to the downside there. It felt like maybe some seasonal harvest pressure possibly tied in with a higher U.S. dollar. I know the dollar making new highs again. What's your thoughts on the wheat trade here on this Tuesday? What was happening there?
Well, I think you stole the thunder. I think you nailed it right there. Seasonally right now, the reality is it's very hard to rally any market, wheat, beans, or corn when you're moving into harvest, and we are starting to move into harvest. I know they're actually harvesting wheat here in Southern Illinois as we speak today. So the harvest is progressing. The other thing kind of hurting the market a little bit is the Russian wheat crop looks like it is going to be a very big wheat crop. Now, the world is trying to figure out how to get that wheat out of the Russian ports. No one is essentially sanctioning the world wheat. There's no country out there that's saying, let's put trade restrictions on it. But the problem is getting financing at this point in time. There's still a problem getting it. But today, I think there's a little bit better optimism. Maybe some of that wheat would be able to make its way into the world market. But I think the biggest thing right now, Jesse, is what you said, is we are moving into that harvest right now. And that tends to put a little bit of pressure on the market. Now, if you cannot get this wheat harvest that's getting started here in the Ukraine relatively quick, if we can't get that wheat out of the market, I would have suspected this wheat break isn't going to last all that long. And once the harvest ends, you're going to see the wheat market snap back up, because that's something the world needs to also consider what's going on. Because right now, Jesse, we're very concerned about how are we going to get this wheat or grain, corn, beans, sunflower, barley that the plant now. How are we going to get it out to the world who needs it? Well, the next problem you're going to get, believe it or not, is the wheat this fall. Because if they cannot sell that wheat that they're getting ready to harvest right now, how are they going to finance next crop, which they start planting within 90, 100, 120 days from now? So if they don't get the crop sold, they don't have the financing for next year's crop, which really sets the table for a problem for world supply of wheat going into 2023. So this situation in Ukraine is not going to go away anytime fast, in my opinion.
Jim, I know as well the trade, keeping a close eye on energies. Crude oil, we're talking right now. It's given up some of the early gains we saw in Tuesday's session. I know some reports out there, OPEC's May output fell from the previous month, so one has to wonder if that's maybe a reasoning. But, I mean, this crude oil market's still very elevated. I know we hit 123, 124-ish here earlier today. So you look at crude and how that's weighing on the grains and the livestock markets. What's your thoughts with energies here today?
Well, I think you got to watch the energy folks as a way. It kind of is the canary in the coal mine. Crude is used in everything. I think if the crude oil does continue to find a bid, that will support the grain market as a whole. If you see weakness, it won't. The strength earlier in the session, Jesse, came from Libya. Libya is having a major political crisis right now, which is shutting down the production of oil in that country. They were producing easily over 1 million barrels a day. Now they're saying they're producing less than 100,000. That's what caused the surge earlier in the day in the crude oil market. Now, maybe they've made a little bit of progress in trying to resolve the conflict there. Like you said, the crude oil market has backed off. But the reality is right now, we're still not producing enough crude in the world to offset the demand. And essentially what's happened is after 2 years, the first year and a half of COVID, we weren't going anywhere. We were staying where we were at. We were living our lives through the TV screens and consuming goods. Okay, we have transitioned away from that with the COVID. After 2 years, everyone's going on vacation. The driving is backing off a little bit, but in general, If you go any vacation spots, they're still full right now. I'm guessing Nashville is probably just as full as it's ever been the last couple of years on the evenings as people are on vacation. And that's keeping the demand relatively stronger than it normally would be, because people are saying, even though I'm paying $5.50, if you're near Chicago, closer to $6 a gallon, I'm going to pay that high price simply because I want to go somewhere. And that's keeping the price of crude as well as all energies elevated. Now, I think eventually we will come into balance because OPEC will continue to increase production. The U.S. will continue to increase production. We're still, I believe, producing about 1 million barrels less crude today than we were pre-pandemic. So we still are back to full capacity. I think they'll continue to build it out and we will get equilibrium. If you're a producer, though, I think you got to be a little bit concerned about how quick that does come into equilibrium. My guess, unfortunately, it's not going to be enough to cover your fuel costs for fall harvest and especially drying needs right now. If you see breaks in the market, my recommendation would be to go ahead and try to lay off some of that risk. My biggest fear right now is they already say they projected we could have an active hurricane season. God help us if a hurricane takes out one of these refineries, because you're going to see the price of energy go even skyrocketing if that would happen. Timing's everything. If you got a late season hurricane taking it out, it could cause a huge problem for trying to get your grain dried. So don't be afraid to lock in some of your needs, and then maybe consider buying like an October crude put or something if you want to kind of hedge off with the fear that maybe you overpaid. But right now, I think the bull market's still entrenched, even with the inflation intact at this point in time, and the crude oil or the energy market in general.
Fantastic analysis. In case in point, I see a lot of pictures of friends on the beach here this week, and I'm getting ready to head to see my family in Iowa. So, like you said, people are still driving, and those gasoline, diesel prices continue to push higher, and people are still consuming. Let's look at livestock here real quick, Jim. Feels like cattle and hogs both just kind of doggish. It just feels like they're kind of, after yesterday's downturn, especially in cattle with the stock market, really just looking for direction in both cattle and hogs. And hogs, were higher for a little bit today and then kind of sold off at the close. So any thoughts on the livestock trade?
I think they were just a day of consolidation right now. The cattle market, the higher end beef cuts, we're worried about the demand for them right now. I mean, it is a kind of a two-edged sword. With a higher energy cost right now, people are going to have to make choices, and they tend to shy away from those higher cuts. That's kind of hurts the demand aspect for cattle and beef, as well as just, the futures traders. But that being said, like we just mentioned, people are on vacation. And when they go on vacation, they tend to go out to eat. So, maybe we're not going to see the demand destruction that you normally would expect at these higher prices, because like I said, after 2 years of people not going places they want to go, it is a problem. There's no doubt about it. But, one interesting aspect, Jesse, I heard was one of the major banks was saying, if you look at the amount of money people had saved in the last 2 years of the pandemic, some estimates are up to $2 trillion were essentially socked away in savings and checking accounts. One estimate said if you had an average person that had about $2,500 in his account to $1,000 in his account pre-pandemic, he had somewhere between $5,000 and $7,500 in the account right now. If he isn't a guy that had around $5,000 in his bank account pre-pandemic, he's got as much as $15,000 in his account. It looks like that money is being spent right now on people going on vacation. And I think that will hopefully hold the market intact for the demand for the beef. Pork, on the other hand, you are seeing pork find a little bit of support because of the high costs. Unfortunately, not everybody is in that predicament where they can afford to go on vacation. There's no doubt about it. The higher cost is definitely having an effect, definitely on the lower part of the income ladder. Those people, what we're finding is they are going to more like the pork product, because when they're eating at home, they tend to eat more pork. Pork tends to be a little bit cheaper at the grocery store. So that tends to be giving the pork market a little bit of support.
Well, Jim, real quick, any final thoughts? Anything else you want to reiterate for us here on the show today?
Well, the only thing I was going to reiterate right now for producers, we would encourage producers who have done a lot of marketing, with the weather models looking very, very warm and dry the next couple of weeks, they might consider buying some out of the money calls as a way to hedge off some of those forward sells. Because we just don't know what it's going to be, where this weather's going to lay out. That may allow you to sleep a little bit at night. But also, I am going to encourage you, to give us a call here at agmarket.net and kind of discuss about what we're recommending people do for the 2023 corn, because I am very concerned. I'm concerned that in the long run, this market is putting a multiple year high in. And you never see it when it tops. It always happens in the blink of an eye. There's going to be some phenomenal opportunities, we believe, to lock in potentially generational wealth. So, it's going to be a very volatile summer, but it's going to give us some great opportunities to lock that in.
Well, Jim, I know folks can reach out to you guys, agmarket.net, give you a call, 844-4AGMARKET, and you guys have a great app people could download as well, don't you?
We do. Any questions, give us a call. And like Jesse said, go to our webpage to sign up for our free trial of our research.
Agmarket.net's where you could find them. With that, Jim McCormick with agmarket.net. Always appreciate the time, sir. Thanks so much. Have a great week.
All right. Thank you for having me on.
And that's going to do it for Market Talk here on this Tuesday, June 14th. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.